Good evening, good morning, depends where you are watching from. My name is Jack, and I'm actually now broadcasting, streaming from Belgium. So, hello. First of all, I will be very grateful if you could write in the comments if you can hear me and you can see me, because this is important to proceed with the material. And to start, the goal of this show is present you the software which I prepared for investors. And I would like to make a quick guide over the functionality, and also I would like to give you some history behind why I created such a tool so that you can use it and how it can help you for in being a better investor. So as I said, I will be very grateful if you could just enter in the comment if you can hear me and you can see me. And in the meantime, I will just proceed with the next slide. So who am I? So basically, in 2018, I started my podcast at systemtrader.show. And the goal of this podcast is to bring people who are experienced in investing and typically people who are following a systematic approach. And that's the name of my website, System Trader. So because the system, meaning a systematic approach to investing based on evidence-based approach. But apart from making the podcast, I'm also the software engineer. And because of the software, being a software engineer, I decided to start building a software which can be helpful also for my private investments. And based on my experiences, which I had from the past, I started investing in 2007. I made a lot of mistakes and it was terrible what I did at the beginning. I just realized that I really need to have a plan which I can verify, which I can adjust to my needs, which I can adjust to my preferences and possibilities, and then I need to follow it. So rather than follow emotions, which are very bad on the markets, I need to follow a plan which is prepared first. And just to be sure that we are on the same page, it doesn't have to mean that we are trying to make some very complex plan. Actually, the opposite is true. The best plan is the one which is very, very simple. But to achieve simple things requires us a lot of work and hard work sometimes even, to appreciate it and then to understand and to follow it, to be disciplined in following a simple plan. And here is just my website. Actually, from 2018, in 2018 I was pretty active, but then when I started preparing my software, my application, the reason why we are here today, actually in 2020 and this year I was not very active on my podcast, which I want to change this year, and I want to be more active on podcasting as well. But basically, here you can see Gary Antonassi. He appeared on my show twice, and this is the approach which I like very much. Purely systematic approach based on evidence-based approach, rather than some discretionary approach, which is very hard to describe and it's even harder to follow. So what we will talk about today, the short introduction to investing. And in fact, the application will be helpful for both, let's say, sort of investors. The investors which are believing that the market can't be beaten, or they don't want to beat the market, and they want to use a passive approach, which is absolutely okay. And I think even that for the most of the people, it's the best approach which can be taken, because rather than trying to beat the market and most often to be beaten by the market, it's quite wise to just buy the whole market and just hold it. It's very easy to say, and technically it's very easy to do, but in fact it's very hard to be disciplined in such approach as in every approach with investing. So that's why, again, I have created my software so that it can be treated also as an educational tool, so that you can see how the markets are working and how discipline in investing is very important because, in fact, as Warren Buffett says, investing is simple but not easy, and there's a lot of meaning in these words. But if you are willing to do something more and you believe that the markets can be beaten, or you have a different, let's say, approach to markets, I mean, you want to be active, then also in my software you will find strategies which are active strategies. And again, these strategies can be tested, they can be verified, and before investing you can see how they are working. Obviously, it can be done on the historical data only, but if something doesn't work on historical data, obviously we should not believe that it can work on the real market. But just to be clear, I'm talking here mostly to people who are having some surpluses in their personal, in the domestic budget, let's say. So what I'm trying to say is that we should not invest the money which we cannot afford to lose. And I'm not trying to explain here that you should be prepared to lose your money when investing, but we should have a healthy domestic budget in the first place before thinking about investing. And once we have a healthy domestic budget, then we can generate some surpluses. And then these surpluses we should try to manage in a wise way, having a longer term approach, and the money which we don't need today. And if we are disciplined in our approach with investing, actually we have to invest, because especially nowadays in the era of very low interest rates, if we will bring our money to the bank on the deposit, then basically the real value of this money will be lost over time, because it's very hard even by the deposit to beat the inflation rate. So you have to invest, but you have to also, as I said, adjust your investment style to your mood, to your ability, to your risk averse, and so on. And I will present that when I will demonstrate the software. So basically, this is also about how the System Trader software can help us. Is just we can do the homework before investing our money, and this is very important. And then I will show you the application, and if there will be any questions, I will be just presenting it. Okay, so I had Meb Faber here in my show on the podcast at the beginning of 2020, and that was just when there was a market crash due to the COVID-19. And Meb Faber is a well-known person in United States. He's also running his own podcast, but he's also a chief investment officer at Cambria Investment. And he said words which I think are very valuable and worth to mention here, that thousands of years of human evolution in the savanna of Africa have not prepared us to trade Amazon and Google stocks, interest rates, commodities, or other financial instruments. And many correct investment decisions are contrary to our daily life intuition and experience. And I think that this is very important to understand, that if we try without any homework, without any making any preparation to invest our money on the market, bringing our life experience, then basically we are doomed to failure, because this will not work. Actually, we should mostly do the opposite things which we are thinking to do. So therefore, we need a plan, and we need to do our homework in order not to be the losers on the market. So here we can see three pillars of the idea behind my software. The first pillar is that we are using the built-in strategies, and just maybe I will make it a bit bigger so that you can see it better. So you need a plan, and in order to have a plan, we have to somehow achieve it. So you you can use built-in strategies, or you can build your own strategies. And currently in my software, you can find over 40 predefined built-in strategies, mostly passive portfolios, but there are also 2 active strategies, and there will be more there are more on the way. But I wanted, in the first place, address the passive approach, because I think that for most of the people, this is the right way to go. And then, if someone really wants to do something more, then he can go towards the active approach. But this is just my opinion. Someone can say that he doesn't want to go either. Towards, let's say, passive investment or active investment. Hello, George. So I guess that you can hear me and you can see me, which is great. So once we have these built-in strategies, or we build our own, we can backtest our strategy. And the software contains data which is going back up to 100 years. And this is very important, because if we will look only on the recent data, then we can have a very bad conclusions. Because let's say you are looking on the performance of S&P 500, 500 biggest American stocks, and you're looking on the performance from the last 10 years, then you can think that it's a great money-making machine, because just it always goes only up. There are even maybe times where the market goes for a short time down, but basically it looks very great, and you could be over-optimistic. But if you take a broader perspective, and if you look on the market taking into account 50 or 100 years, then you can see that the market is how the market is working, and this is very important to understand. Thank you, George. Everything is okay. And because you have this data built in on the application, you can really see how the strategy behaved in the past in various extreme situations. So you can see how it works in the rising interest rates environment or falling interest rates environment, how it even worked during cataclysms like the Second World War and so on. And once we have our strategy, which is backtested, which is adjusted to our preferences, then we can implement such strategy, meaning that we can just follow that strategy. And this is very important, to follow the strategy rather than our emotions. And these strategies which are now in System Trader software are very simple. So basically, they don't require us to spend every day on the market. We can take actions once a month, or even once every quarter or once a year. But we have to be disciplined in following our plan, and we should avoid taking any actions as a consequence of the emotions. And it's very easy to say, but it's very hard to do. And the great example again could be the COVID-19 last year. For example, in March, when the market really was falling down, the stock market, and let's say that then the strategy tells you buy stocks when everyone is panicking and everyone is trying to run away from this train, and you have a signal buy stocks. It's very hard to do it. That's why you have to be prepared. That's why you have to make your homework as much as well as you can do before entering the market. And then once you're on the market, you have to just follow it. But before showing you the software, I will just give you a short history which behind my software. So as I said, I started my podcast in 2018. And at the time, I was still doing quite a lot of short-term trading, which is very demanding in the way that you have to spend more time on it, and it's also emotionally demanding. And I was also looking the way how to diversify my portfolio and how to put more money in the long-term strategies. And I thought that I can create such a tool for just myself. At that time, I wasn't thinking yet about making any commercial product. I just wanted to create something which can be helpful for my personal needs. And the time was flying, and in 2020 I actually before in 2019 I just realized that what I'm working on can be also probably helpful for others. And in May 2020, last year, I presented my first version publicly, the beta version of my software. And at the end of last year, in December, I started the pre-ordering for it. Although I live now in Belgium, I'm from Poland originally, so I was just making this sale in Poland for the Polish customers. And in just a few days ago, in this month, I presented version 1.1. So at the end of March this year, I presented version 1.0, which was not seen outside of Poland. But this month, I decided to go worldwide, let's say, and present my software to the broader audience. And that's the reason we are here today. I'm presenting the version 1.1 of my software, and I think that this is a good moment to make a short demo of the software so that you can have a better understanding what's behind. And just to make the whole thing, let's say, better to see for you, maybe I will just hide myself so that what you can see on the screen is of better quality. Just a short introduction. The resolution of my screen is increased to make the font size bigger, so that hopefully you can see and you can read what is the letters here. But normally, probably if you are using this on your personal computer, the screen resolution is bigger, so therefore you have a bigger workspace. And this is the main screen. So once you open the software, this is what you will see. And on the left side, you see the backtester. This is the, let's say, the main view of the application. And here you see built-in predefined strategies and portfolios. And the first category, the biggest one currently, is containing the passive portfolios, prepared or designed quite often by famous money managers, like, for example, All Weather portfolio, which was designed by Ray Dalio from Bridgewater hedge fund. Or you can see, for example, here a very simple portfolio which was suggested by Warren Buffett. All these portfolios are passive portfolios, meaning that you have a fixed allocation, like in that case you have 90% of S&P 500 shares, and then you have 10% of treasury bills. And basically all you do is just you are trying to keep these weights fixed. So from time to time, you have to do the rebalancing. You have, let's say, if the stocks are going up and suddenly instead of 90% in a portfolio, we have 95%, we have to sell a bit of them and buy some more treasury bills or the opposite. So this is very simple portfolio. But apart from, as I said at the beginning, passive portfolios, there are also active strategies, and both can be implemented using either index funds, ETFs, or individual stocks. But for the individual stocks, I will go a bit later. Now, as for the passive portfolios, they are best when implemented via the index funds or ETFs. And we have also the global equities momentum, GEM, which is also which can be also used easily using ETFs. And just to make the whole thing a bit clear, momentum is an active strategy. I mean, the global equities momentum is an active strategy, and momentum, as it's written here, it's an anomaly where market with strong relative strength continue outperforming while weak markets continue to underperform. And basically here, depending on what is happening on the market, in the portfolio, we are holding either American or non-American stock indices, or when the stocks are weak, we are holding in our portfolio bonds as a safe harbor when the stock market is weak. So this is a global equities momentum, which is very well explained also during my interview with Gary Antonassi on my podcast. So you can click here, and then you will be, it will open for you the podcast, or you can also read a great book of Gary Antonassi about his approach to investing. But it's very, very straightforward, very, very simple strategy. If you want to invest using individual stocks, then you can also, there's another strategy which is called Advanced Equity Momentum. And here, basically, what you can do is that based on what is happening on the market, we are filtering, let's say, universe from the selected market, and we are filtering those stocks, those companies which are price is going up. And so basically it's again a momentum, but rather than again used against indices, here it's used against stocks. And if the market is going down, then we are removing such stocks from our portfolio, and we can have in our portfolio in the place of stocks either cash or bonds. So this is the main screen, and from that screen you can actually do a lot of other things, like, for example, you can set your preferences. If you want to have, for example, rather than black screen or dark mode, you can have a blue screen. You can change it here. Also, you have access to all the things which allow you to manage the portfolios here. And also from that screen, you can run the tests of the portfolios. But for that, let's go to the backtester. And now, as I said, we can see how it works in reality. So let's say that we have a classic portfolio 60-40, which is 60% of American stocks and 40% of bonds. And we want to see how such simple portfolio performed in the last 100 years or so, depending how much data we have for a particular market. So you can see here in the brackets the symbols of the particular ETFs you can use to implement such portfolio. But now we can see that the results are presented, and the results are going back to 1920. Which is over 100 years, and it's till last Friday, because the data was updated for last Friday. We can see the results for such simple portfolio, and we can read the report with all details, all metrics behind. We can see even the performance of such portfolio month by month. We can see the rates of return for a given a period of time, monthly, annually, or let's say for 20 years. We can see obviously the performance, the equity line. So as you can see, the long-term approach really works, because even such a simple portfolio where you don't try even to beat the market, there's a impressive line going up. And you have a rebalancing history, because the software, apart from making backtesting, historical backtesting, it also allows you to monitor your portfolio, which means that once you implemented your portfolio, once you have it on the market, you can be told by the application that you have to make some changes in the portfolio, or it generates you signals. And for example, we can see that in November 2020, in that portfolio, the application said us that there is too much IVV, which is S&P 500 ETF. So we have to sell it a bit, and we have to buy a bit more bonds. So apparently the stock market after the COVID-19 crash recovered quickly, and instead of 60% of S&P 500 in our portfolio, we had 68%, and the original weight was 60-40. Therefore, we had to make a rebalancing. So again, we have 60% of S&P 500 stocks and 40% of bonds in our portfolio. So backtesting is one thing for the application, but also monitoring on the ongoing basis is another thing, which is the task for this software. And why it's so important to have such a tool at hand. I will give you a great example which I made before. We have a very simple portfolio which is global 80-20, which is a global equities exposure to global equities, and there's 80% of them in our portfolio, and 20% is the exposure to global bonds, treasury bonds. And that's a very simple portfolio, and as we can see, from 1925 till today, such portfolio was generating around 9% per year, with the biggest maximum drawdown was over 57%. So we could say, okay, looks fine, looks interesting, but is it all we have to know? And if we go to the returns, rates of return, we can see that, and here we have rates of return for 20 years. We can see that there were 20 years period during which our portfolio was multiplied by over almost 2,000%. Whereas there were also periods where after 20 years, our portfolio was only multiplied by, we had the return of, let's say, like here 50% or 100%. So we see that this difference can be huge. And the problem is that if we only say that such portfolio was making 9% on average per year, it's not enough, because during your lifetime you can be in the bad moment, and rather than making after 20 years of investing, let's say 2,000% to have the return 2,000%, you can have after 20 years 50%. And this is the nominal rate. It's not saying anything yet even about inflation. Another example can be bonds. Let's say that you're very conservative, and therefore you want to put everything or majority of your portfolio in safe haven, and you say that you want to put most of your money to treasury bonds. And there was a period between 1940 to 1980, 40 years, where if you would invest 100% of your money in American treasury bonds, and there are 10 years treasury bonds, 30 years treasury bonds, you would make nominally every year on average almost 3%. And that looks pretty okay. Maximum drawdown was 25%. But if you take into account inflation and the fact that during that period from 1940 to beginning of the 80s of the previous century, the interest rates were rising. In fact, our portfolio, after adjustment to inflation, was losing almost 2% per year. And that's a disaster. That's why Warren Buffett said that bonds can be very dangerous if we don't understand what's behind. And I'm telling that because from one side, bonds are needed in our portfolio to lower the fluctuations, to lower the volatility in that portfolio. On the other hand, if you are really very conservative and you will put most of your money into bonds, then it can happen, especially now in the era of very low interest rates. And if these interest rates, I don't know, maybe not tomorrow, but in next few years will start going up, then basically that will be a very difficult moment for bonds. And this is not to say that you cannot buy bonds, you should not have bonds in your portfolio, because I think that most of us, we have to have bonds in our portfolio. This is to say that you have to understand that bonds may not beat inflation, especially in the moment in history we are now, where after 40 years of falling interest rates, being on the bond market was great, but it may not be the case for the next 40 years. Therefore, if you go back in the history far enough, and like in here to 1940, you can see that we already had in history cases where bonds were not protecting us against inflation. All right, so this is about the backtester, and now let me go to the data. In software, we have data which is built in, and this is a historical data. And for example, we can see that when I was making these tests here, we were able to go back even to 1925, for example, with our tests. But apart from built-in data, and this built-in data we can notice here, if we click edit on the portfolio, we can see that we can define here all the settings like inflation, for example. We can decide how we want to rebalance our portfolio, but we also can decide what we want to have in our portfolio. And apart from ETFs, we can put the data which is going much further in history. The ETFs are pretty new instrument. Okay, the first ETF was created like almost 30 years ago, but basically most ETFs, their history is 5-10 years. And if we want to make any backtest, this is not enough to make any meaningful conclusions just by backtesting it or backtesting our portfolio using 5 or 10 years of history. Therefore, we have built-in data. Like here, we can see S&P 500, IVV, this is the ETF, but we also have so-called backfill, and this is the data which is built into the application. And here in the System Trader group, you can see a lot of tickers, which is behind which you can find the data, historical data, which is going back even to the beginning of 1900. So even over 100 years of market data history you have built into the application. And this is for indices. So you have, for example, government bonds. You have, for example, world stocks. You have S&P 500. You have small stocks, American stocks. You have, for example, real estates. You have MSCI indexes, or you have gold, and so on and so forth. So because of having that here, we can make our strategies backtested even for over 100 years. And this is one thing, and this data is built in and you can just use it, especially if you want to make your test going further than would be possible with just ETF data. But apart from that, in the data menu, you have the ability to fetch data which is covering over 70 stock exchanges worldwide. And if you press import here, you can see a list of countries from which you can fetch the data. And as you can see, Argentina, Australia, Austria, Belgium, Brazil, and so on, it's really over 70 stock exchanges. And if you go to any of this, you can just download the data from a given stock exchange. So for example, here we have a Swiss exchange. And if you press next, you can either download the common stock data or ETF or just indexes. Also, if it's convenient for you, sometimes if you want to get just individual stocks, let's say that you want to have stocks from S&P 500. So that would be very difficult to pick stock by stock and do it 500 times. So you can import the whole index. And let's say that you want to have S&P 500. So you just enter S&P 500, and then if you press next, then you have all the stocks which are behind that index, and you can in one batch fetch all the stock all the stocks which are part of S&P 500 index. So you have this data access built in, and this data is of very great quality because it's guaranteed by Unicorn Data Services. This is a company from France. And once you import that data into the application, this data can be automatically refreshed, so you don't even have to remember about updating it. And upon opening the application, this data will be updated. And here, for example, on the bottom, you see automatic data update completed at 1 o'clock. That was the moment when I opened my application, and the data was automatically updated. Therefore, once, let's say, you have built your data, your portfolio, like let's say 60-40 portfolio, and you want to monitor it, so you will always have the latest data which will allow you to monitor such portfolio, because you don't have to worry about finding this data somewhere on the internet. But if you want, obviously, you can also import the data from external sources like text file or Metastock or other formats. Or you can also fetch data, for example, from Stook or Yahoo services. And the problem with this data is that, apart from the fact that it's free, because this data, although you don't have to pay extra for it, it's part of the software. But once you buy the subscription, you have this data included in the subscription. But you don't have to pay it extra. You just have it as part of buying the license for the software. But here you have free data. But the problem with this data is the quality sometimes is very, very bad, and you cannot just rely on such sources, especially if you really want to be serious about investing, and you don't want to, and you want to avoid the situation in which the data is having a lot of glitches inside. So this is about the data. And now let's go further about charting. So although this application is not really meant for people interested in technical analysis, but still, if you want, you can open whatever symbol, whatever stock or ETF on the chart as well. So for example, here we have Dow Jones Industrial Average stocks fetched, and we can open, for example, Apple computer stocks on the chart, and we can apply here some technical analysis indicators, some averages, bands, and so on and so forth. So all this is there, and if you want, you can use this application also as a charting application. This is not, I would say, the main goal of this application, but if you want to see something on the chart, there is also such possibility, especially that you have access to data coming from, as I said, over 70 stock exchanges worldwide. So I think that this can be quite interesting. And there's another thing, ETF directory. And this is especially for the people, for investors who are located in Europe. Although not only, because I know that also investors from other continents may use, for example, for tax reasons, ETFs which are listed on European stock exchanges. But if you are located in Europe, then basically probably you have access only to ETFs which are listed in Europe. You probably, for example, don't have access to American ETFs. But here in this ETF directory, you can find the list of over 2,600 ETFs, and you can find all the details behind every ETF. You can read details like where it's located, like fund domicile, fund currency, and so on and so forth. So if before you will invest any money, you can find also ETFs here. You can find them by asset class, bonds, commodities, currencies, So for example, if we take equity, then we can filter it by, let's say, country, and then we can say, give me all ETFs which are giving us exposure to China, for example. And then we have all ETFs which are giving us, and we see 28 ETFs which are giving us access, exposure to Chinese market, for example. So this is here, and for all this you have also explanation what is behind, when it was, for example, inception date, or what are the fees behind that ETF, or on which stock exchange that given ETF is listed. For example, we see that that particular ETF is listed on Borsa Italiana in London, Stuttgart, and Swiss exchange in Switzerland, or in Frankfurt in Germany. So this is so-called ETF directory, especially for investors who are using so-called UCITS ETF, which are listed on European stock exchanges. And this is pretty much all about the software. Actually, if I want to make it very, very fast, I just wanted to make one additional comment. If you are in the backtester, you have always access to some educational material. So, for example, if you are on a passive portfolio, you can see some introductory video, or you can see some podcasts. For example, for the passive portfolios, I had on my show Rick Ferry, who explains why should most investors invest passively. So I think that also for people who are very, let's say, at the beginning of their path to investing, and they are looking for some educational tool, I think that System Trader is a great tool also from educational point of view. And then also, if you want to go a step further, you can really come up with your own portfolio, and then you can implement it on the market. So I think that System Trader is great for that. But what next? And maybe I will just show myself now here, because I'm not presenting now software. So this is just the beginning of my software, let's say. I was working on it from 2018, but this is the first moment now I'm presenting this, and this is my also first effort to reach to you, to present you what I did, and to wait for your feedback. So by the way, if you have any comments, or if you have any questions to what I was presenting here, this is a good moment to ask questions in the comments, so I can answer them now. But what plans I have for the future? So I'm just presenting you the first version of my software. But what I want to do, I want to add in the coming months multi-currency support. So let's say that you are located in Europe, and you are investing in ETFs which are quoted in American dollar. But what is really interesting you is how your portfolio is performing in euro. Therefore, having that feature, multi-currency support, you can have a portfolio which is constantly converted to your local currency. Another addition which I plan to have in my software is Cashflows. So imagine that probably no one is just making one big payment to the brokerage account and keeping it there for 30 years, and then retiring. So basically, during our lifetime, we are making some contributions, and then we are making some withdrawals. So with the cash flows, you can simulate how it affects your portfolio, and how the market works in the long term when you are adding more and more to your portfolio, and then when you are withdrawing. Another addition which I plan to have in my software is multi-strategies. So I showed you some passive portfolios today mostly, but there are also active strategies, like, for example, GEM strategy, which I talked a bit before, global equities momentum. And such strategy, if you, for example, go to, or even if we take the whole accessible history, is really great because this is an active strategy which is very easy to implement, because you can just have one of 3 ETFs in your portfolio. But if you go back to 1926, to the end of previous year, you can see that such simple strategy was making over 12% per year, whereas S&P 500 was making 10%. So we can see that for almost 100 years, this strategy was constantly beating S&P 500. And also, this is just only on the return side, but also on the risk side, we see that the drawdown was much smaller, because S&P 500 is having maximum drawdown at the level of 83%, whereas this strategy has the maximum drawdown on the level of 45%. So this is a big difference. But what I'm trying to say is that basically, if you have more than one strategy in your portfolio, let's say you have a passive portfolio and you have an active strategy, you can make one big strategy. You can say that I want to allocate 50% to strategy A and 50% to strategy B, and then you can test it as a whole and see if there is some what is the common result of these 2 strategies. So that's another add-on I plan to have in my software. And then, as I said also at the beginning, I'm planning to add more strategies to my portfolio. So now we have like 40 passive portfolios, and you can create your own. And we have 2 active strategies, but you can also add, I plan also to add more new strategies. Especially, I like momentum anomaly, but there will be also something for from the mean reversion, or maybe if someone is interested about dividend investing, maybe there will be also something on the way for such investors. So that's pretty much all from my side for today. And just one thing, and also the reason why I wanted to show you that today, is that just before the summer holiday, I have a sale of that software. And basically till Wednesday, so there are just only 2 days left, you can buy this software at a very attractive price, because I'm just starting that now. This is just my very first effort to sell that software and just to see how to proceed with my project. If you really like what I presented to you, and if you really want to do your homework when it comes to investing, then I think that at a very low price you can get a software which will allow you to learn about how to invest in a reliable way, let's say, on the market. The software which will allow you to prepare your plan, and basically at a very low price you can have the software which will make you a better investor. And this is because the problematic stuff with such software is the data. And because the data there is licensed, I'm selling this as a subscription. And for 1 year, you can buy it for just only $179, which is really, I would say, cheap if you consider what you are receiving in return. And this price is exceptionally low now, but it will definitely go higher after the summer holiday. I plan to have a bigger sale. I plan to have some organized action. So basically, then the price will be higher and it will be almost $200. But now, if you really trust to what I showed you and you really want to support my project, I think that this is the best price you can get, because this price will never go lower. So if you think this is what you are looking for, if you really want to move on the market in a reliable way with a plan, then I encourage you to go to my website, systemtrader.show/shop, and there you can see the offer. And as I said, you have to hurry up because there are only 2 days left when you can buy it. Okay, I don't see any questions for now. If you have any questions, just please write me an email. You probably have an email because you are here watching this video, so basically that means that you're on my newsletter. Therefore, you can just simply drop me an email and I will answer any questions you may have. For now, I thank you very much for your attention. I appreciate that you spent your time with me, and I wish you a nice evening, or if you are in different time zone, I wish you a great day. Thank you. Bye-bye.